What is up, guys? For today's video, I want to cover something that's very important and not often talked about, and that is creating a set of rules to go with your trading. This set of rules should include stuff like, managing risk, over trading, how to handle over trading, times to trade, when to enter or exit a play, and then also the more important, when to step away from the computer, when to step away from the screen, because this is something that's very, very important. And the real reason why this is all so important is because the mental side is hard. But when we can handle our emotions and create rules, they can help to manage those emotions a lot better. Now, when it comes to why we should do this or why rules are so important, the main reason, being those emotions, trying to reduce emotions that are associated with trading, as in my opinion, this is the hardest part of trading. It also can help reduce our risk, increase that reward, helps with, remaining disciplined, not over trading. That's a very big one. And a big thing is that revenge trading. We take a loss here or there, maybe two in a row, and trying to make that money back fast. We get into a trade without really knowing why we got in, and that's that over trading aspect. Another thing, it helps us to be our best every day. If we have a set of rules going along with, helping to be our best every day that we trade, it helps make your system or your strategy more repeatable. Because we don't take trades that don't follow our rules, right? When we do break our rules, like, it's going to happen. Your rule is going to get broken. It's just part of trading. But the days that we are red, most of the time, is when we do break those rules, myself included. That is something very, very common with my tradings. We want to make sure that these rules are also repeatable, no matter the market conditions, so that we can make money no matter what the conditions of the market. Doesn't matter if it's chop day, a trend day, bulls are in control or bears are in control. These should help us to increase our chances of being profitable no matter the market conditions. So when it comes to the how, the first thing that I would recommend is thinking about what your goal is of trading. For me, I want this to be my entire career, right? Like, trading can provide some things that I really, really like. Those being, the ability to trade anywhere, anytime, not having a boss, and the revenue we bring in is technically uncapped. So that's something that really, really excites me and I like a lot about trading. When it comes to creating our rules, the first thing on the how to create our rules, I would start with, where do most of my losses come from? In some cases, this could be entries, exits, anything like that, and create rules around that. But how do we find what these losses are coming from if we don't really understand right now? And that would be by taking notes of the trades that you've taken, and learn from the losers. Why did I enter this trade? But more importantly, why did I lose this trade? And then once you start to break this down, maybe for a week, it can be just a sentence or two, and look for a common theme. When we find this common theme, try to build some rules around taking that part of trading out, whatever it might be. For me, it's entries a lot of the time, and most of that comes with patience. So one of my rules is, do not trade within the first 15 minutes of market open, because my entries are not great. Another one being, wait on retest to enter if I don't catch the break, right? It's okay if that runs a ton and I'm not in, but the risk to reward isn't really there unless I wait on that retest, in my honest opinion. But to kind of hit on some more of my rules that have taken some time to build, but they do really, really help when it comes to trading. So my first rule that's very big for me is, whenever I hit my daily goal is 2 to 5%. I know it's not crazy, but that compounds over time and that can add up to see some really, really cool things. But once I hit that daily goal, shut the screen down, step away from the screen. This not only helps with my mental health, but it also forces me not to overtrade. Another big rule for myself, and I think is one that most people should incorporate, is do not let a green trade turn red. Take profits. That is very demoralizing, seeing a trade go from green to red. It can really mess up our mental health. So I want to focus on not letting my trades go red. That goes with the risk management part. Another one for me when it comes to entries is, don't trade in between levels. let's use NEO today, for example. So NEO, my put trigger was 24.3 today. And an example of not trading between levels, say I miss this retest here of 24.3, that's okay. It happens. Things like that are going to happen. But I don't want to trade or enter into any of these candles down in here, get that FOMO sense where my risk to reward really isn't defined. I don't have target set. I don't have a level. So that really helps me with the discipline part of trading. Don't trade in between those levels. Wait on a 5-minute confirmation above or below our levels to get into a trade. Another rule for me when it comes to trading, and if I'm trading bad, say it's 3 bad trades in a row, I'm going to step away from the computer. Maybe it's early morning, right? I can come back during power hour. That's cool. But I don't want to get in this habit of revenge trading after bad trades. When we get in this habit or this consistent, bad trades back to back to back to back, it tends to turn more into an emotions thing as opposed to really seeing what the trade is, have defined risk to reward, stuff like that. So just stepping away, taking some time to really think, clear the mind out, maybe go out and do something. This can help with emotions a lot as well, and it reduces that tempt to revenge trade. Another rule when it comes to FOMO is whenever I am actually in a trade or I'm about to enter into a trade, I stay off of social media. And the reason being, I don't want it to skew my judgment. Maybe I see something about a ticker I'm about to play, and I don't want it to skew my judgment. I just want to play price action, right? So that's a big one for me as well. As many of you know, PayPal is the one ticker that absolutely blew up my account very, very fast. And what I learned from that is do not swing weeklies and only overnight runners. This is very, very big for me because, it blew up my account. But without that happening, I would not have implemented this rule and wouldn't have learned from the mistake. Since then, I have never overnighted a weekly. The theta decay, not very great, stuff like that. So I would rather, if I am going to swing something maybe a month or 2 out, that gives me a little bit more time. Those premiums aren't going to move as fast in regards to theta decay. Now, when it comes to risk management in some of my rules, I have that 10% hard stop loss rule, and that's just because I can always enter back into a trade, but I can't get that money back, right? Another one goes that is sizing. I don't want to place more than 10% of my entire capital max on one trade. Most of my trades are about 5% of my entire capital deployed on one play. I know this is a bit harder for smaller accounts. So say account with about 500 capital invested, I would recommend using maybe 100 to 150 max on one set play. And the reason being, don't want that one play to blow up my account, right? I would also really focus on having good risk management, having a stop loss, whatever it might be for you. Some people are more adverse to risk. They might be able to take a 20 or a 15% stop loss. That's perfectly cool. That's up to you, but I wouldn't recommend doing anything over 25% as it makes it so that you have to make more money on plays to really cut back for that amount of risk that you're willing to put on every play. Now, when it comes to exits, my scaling rule is another one of my rules, and that's 20% next big price target, and then after that, I just have a runner. I scale in thirds, and that's another thing. Another really, really big rule for me, and I really would advise this to you as well, would be not ever sizing down, especially if you're day trading. If we do miss a play or our entries aren't right, whatever, most of the time sizing down is just going to hurt us more. And I know we think sizing down I get a better cost average, but most of the time that's going to result in losing more capital. So that's not really something that I would recommend. Now, when it comes to tickers that I'm watching this week, SQ, I love it a lot for the downside. But if we look at this, they have earnings on the 24th, which is Tuesday. We finally broke through that 199.5 level, big V, PA gap down to 84. But there's earnings Tuesday, so IVs is going to be pretty crazy. So I've chosen a different ticker for my top watch this week. Now, when it comes to rules, I know they're not, the most beautiful thing of trading, but honestly, they're one of the most important because they do go perfectly with that hard part of trading, which is managing our emotions. A successful trade to me isn't really, is it red or is it green? It's more, did I follow my rules? And if I can say that I followed my rules 100% or maybe even, 95%, because there are times where we do mess up or we don't follow one of our rules. That's going to happen, as I stated before. But a successful trade to me is, did I follow my rules? If I followed my rules and I still lost on the play, I can be happy with knowing that I had that discipline to follow my rules. I didn't lose too much because I do have that risk management in place, and my rules really help me to preserve capital. In this market, with the chop, that's another really, really big thing is, preserving capital. Be able to trade tomorrow. We're not going to win every trade, but if we cut our losses fast, the likelihood of us being profitable is way higher than it is with the emotions trading and having no stop loss, having no risk management. So that's one thing, that's very, very important, and I've definitely seen that a lot in this current market. So looking at, just a brief little update on SPY. Pretty ugly day again today. Increase in volume, ugly. Looks like a head and shoulders pattern. So I'm expecting downside move here on SPY, the overall market. Now it's time for my top play for next week. And looking, at today, pretty bearish day. Some more news after hours, so I expect things, bleed a little bit. But when looking for a play that I'm really, really focused on, I look for a play that has, potential for a nice upside move. And the one that sticks out to me is Snap. And the reason being, we've bled a lot over the past couple days, but Snap has actually remained pretty strong. And then we break down this flow, some things that really stick out to me. Puts are getting hit nice. Of course, these 225.38 stick out. 218s we're getting hit down to 35. We also have 39 calls getting hit. So I like that, the potential on the flow for a move either side. Not too crazy out of the money for next week, but I really like that Snap has held pretty strong, but the downside on Snap is also amazing, right? There's a nice gap to fill off earnings, and once we can get under some levels, this can make a big move in either direction. In terms of levels, so looking at Snap on the daily, we did close underneath the POC, but let's break down this a little bit better on the hourly. So it looks like 38.10 is a big level. So I'm gonna take calls over 38.10. I like that. And levels I'm really gonna watch over that are that 39 level, definitely a big one. Throw this in here at 39.05. Flip you to yellow. So I like to move up towards 39 over 38.10, very big level. And the level we really, really need to break on Snap for a big move to the upside is 42. On the downside, which I do like the downside a lot on Snap, the first level I'm going to watch is right underneath this at 36.85. Throw this in here, 36.86, cool. And then underneath that, we got room to the downside, down towards 35. I'll watch 35. Let's flip this to 15, look a little bit better. So on the 15, definitely some congestion zones, right? But underneath that 37, 35, I think 36.85, 36.83, easy move. Underneath that, this level here at 36, gonna be a big one. 36, and then underneath that, the level we need to break to the downside is 35. So throw this in here, 35, and then we have a gap to fill from 34 all the way down to 25. So the potential for a big downside move is there. Potential for a bounce is there with some pretty decent relative strength in a very weak market. I love Snap. Tomorrow night, evening area, episode 2 of Not Financial Advisors will be there, and in that episode we are going to discuss advice we give to a younger trader, how to begin trading options, and some things that we've learned along the way. That'll be with me and Adam Silver, so look forward to that coming out tomorrow night. which will be Sunday. I believe that is the 20th of February. So that's something very, very excited for.